Hi, this is Jessica Fiore from Multi-Housing News, here today with Stephen Rosenberg from Greystone. He's the CEO. Thank you for joining us today.
My pleasure. Thank you very much for having me.
Of course. Now, let's get started. I was wondering if you could tell me what some of the current trends are for multifamily.
Well, the overarching trend, obviously, for multifamily is to take advantage of the incredibly low interest rates in today's market and refinance pretty much everything that you own. So we're seeing a huge volume of refinancing. The one trend that I see coming down the road that I think is going to be a game changer and have huge impact on the industry are the properties that were financed about 10 years ago with the Wall Street conduit loans that are now maturing. Almost all of those loans were done as 10-year loans, and those loans are maturing, and because of the aggressive lending practices that existed 10 years ago, many of those loans are over-leveraged currently. And based on the more conservative underwriting that banks and agencies are doing now, we're finding a very high percentage of the loans that are coming to us for refinancing coming up short of proceeds. And one of the things, for example, that Greystone is doing to address that issue is we are utilizing our own capital and assembling additional capital to address this need for mezzanine loans or preferred equity. But I see that as a huge trend that is just beginning but can turn into an avalanche.
Sure. And now do you see banks currently trying to beat out Fannie Mae, Freddie Mac, or the FHA?
Not really. We're certainly seeing banks making some multifamily loans, especially for borrowers that are not looking to lock in long-term rates. Why exactly a borrower wouldn't want to lock in long-term rates is a question, but let's say in an example where they're planning to sell the property in the very near future. But from a long-term finance perspective, I'm not seeing banks able to compete with the agencies at all. As a matter of fact, at Greystone, we're receiving calls from numerous banks right now wanting to set up correspondent agreements with Greystone so that they can at least provide the long-term financing product to their clients. But right now, I think it's clear to everyone that between Fannie Mae, Freddie Mac, and the FHA, the outcomes or the resulting loans are probably outcomes that can't be achieved with banks.
Sure. And what about Greystone in particular? How do you guys distinguish yourselves among the competition?
I think that the core factor distinguishing Greystone from its competition is our willingness and desire to utilize our own balance sheet and capital to find solutions for borrowers that other banks or lenders aren't providing. So right now we're doing a significant amount of early rate locks for borrowers that just don't want to lose the market. We see lots of borrowers now that really would like to achieve the rates possible, for example, with a long-term FHA loan, which is an ultimate rate somewhere in the mid to low twos, which is amazing on a non-recourse basis and self-amortizing. But the borrowers know that it's going to take 6 months to maybe even a year, depending on the office, to close that loan. And so we're seeing a huge demand at the moment to lock that rate, and Greystone is willing, off of its trading desk, to accomplish that. And so we're seeing locking in rates is something that we're doing that we're not seeing other banks do. From time to time they're doing it, but I think utilizing our capital and our balance sheet to provide sometimes this additional help to borrowers, I think is a distinguishing factor. I think in addition to that, we are providing bridge loans to borrowers that need to reposition properties that aren't yet ready for Fannie Mae or Freddie Mac or HUD. And so it's at the core of everything that Greystone does is really a deep and exquisite desire to apply extreme creativity and provide solutions and outcomes that none of our competitors are yet providing.
Great. Well, thank you so much for taking the time to talk to us today.
Thank you very much. Thanks for having me.
Of course. This is Jessica Fuhr again from MHN. Take care.